Welcome to What is a Mortgage with Robert Klein. So with this one, we're just going right to an example. All right, so what is a mortgage? Let's actually just break down the word mortgage first. Mortgage can be broken down into two words, mort and gage. So the term mort, mortuary, morgue, is actually French for death. Gage is Latin for grip. So the term mortgage actually stands for death grip. It's not a good start for most people. Inside of a mortgage, there are three components. First, it's the amount that you borrow. Second is the interest that you pay, the interest rate. Third is the amortization, or how many years you're going to take to pay this debt off. So the amount borrowed, let's use for example $200,000. Interest rate 4%. Now we're going to pay it off in 35 years. So let's determine our monthly payment or our mortgage payment. So we have 200,000. We're going to do 4%. That's 4 divided by 12. That's 0.33% per month. The calculator calculates on a monthly basis. 35 years, but on a monthly basis, 420 months. So now I'm going to calculate the payment, which is 0, which is wrong, which would be a good deal if we could get that. But let's just redo that. 35 here, 4%, 0, calculate. That looks much better. $885 a month. Now, let's break this up. Inside of the mortgage, we both know one part's paying interest to the bank and the other part is paying down our mortgage. So if we are paying $885 a month, what percentage of that is actually going towards interest? So what we do is take 200,000, times that by just the interest, 0.04, divided by 12 is $666 a month. An interesting number. Now if we wanted to find out how much is going to principal minus the 885, that would leave us our principal portion of $218 a month. Now, as we pay down our principal, it would mean that we would owe less, therefore we would be paying less in interest. So what I want to do is sort of show what happens a year from now. So after 1 year of paying down $885 a month, let's determine, I already determined this, we would owe $197,331. So again, at 4%, let's determine how much is going to interest. Times 0.04 divided by 12. $657 a month, or $9 less. And then we're going to take our minus our 885, and we have 227 a month goes to principal. Now this makes sense because the more principal we pay down, the less we owe, therefore the less interest that we're going to pay. So I've actually put in a PDF together just below the video, and you can see an entire payment schedule for this mortgage. So that's the basics of a mortgage. So below you're going to find a link to a PDF that's going to go through the payment structure over 35 years. And also we're going to have a link there showing actually a direct link to a mortgage calculator.